To build anything that truly lasts, it takes time.
In today's trading session, remember Nifty ended absolutely flat yesterday above that 25,200 mark. But to assess the macroeconomic setup this morning, we are now joined by Hugh Johnson of Hugh Johnson Economics. Mr. Johnson, thank you so much for taking your time out and joining us here on ET Now. White House official yesterday said that Trump is looking to fire Powell. However, Trump later clarified that he does not intend to do so. How do you read this entire situation, and what does this mean for central banks' independence back in US?
Well, it's the one thing that he's on again, off again. When we're talking about tariffs, we've seen that just to be an on again, off again phenomena. When it comes to Powell, it's on again, off again. The truth is, everybody shouldn't take what he says about firing Powell seriously. And the reason I say that is because he cannot fire Powell. It's against the law. So he can say that he'd like to fire Powell, but the truth is he cannot fire Powell. The Congress can fire Powell, but the president cannot. So don't take anything he says about firing Powell seriously. Powell is not going to quit, is not going to leave. He will be there until his term expires or ends, and just simply accept that.
All right. Hi, Mr. Johnson. This is Kanishka also joining in. Like you said, Trump cannot fire Powell, but in his statement yesterday, he did say that he does not rule out anything. So what does he mean by that? What are the actions that he can take against a Fed chair?
I haven't a clue what he means by that. There's really nothing he can do when it comes to Powell. Powell's going to stay as chairman of the Federal Reserve, as I mentioned, for another year or so. I'm not exactly sure what the term is, but he's going to be the chairman of the Federal Reserve. So you can just simply relax and expect to continue to see his leadership of Powell. And I might add that Powell has done an extraordinary job. When he started as chairman of the Federal Reserve, I was a little bit upset or nervous because he didn't seem to be comfortable with some of the economic terminology that he had to deal with. But he's come a long way. And look, number one, he's been very successful as the chairman of the Federal Reserve. Things have worked out well. The economy continues to expand. Let's not forget that inflation was at 9%. It has now come down close to, say, 2.5%. No, I know we have not hit the 2% target, but he's done a really credible job on bringing inflation down and at the same time preserving ongoing growth in the economy. And it looks to me as though that combination is going to continue in the foreseeable future. He's done a great job. He can't be fired. He's not going to quit. We're going to have Powell for at least the next, I think it's a year that his term when his term expires.
Has done a great job and he cannot be fired. That's the word coming in. But how do you assess the entire tariff situation and what impact will it have on global markets? The other day we had some tariff announcement that came in on Indonesia. Today, of course, Donald Trump has said that he's close to making a deal with India as well. Do you think markets have already reacted to anything that the market was expecting when it comes to tariffs, and perhaps we will not see any major significant impact on margins irrespective of the kind of announcements we see?
This is going to play out very much the way Trump won 2018, 2019 played out. And the number one thing is there's going to be volatility in what Trump says. It's going to be on again, off again when it comes to tariffs with any individual country. Remember, we talked about having roughly 60 to 70 deals done by now. We got 3. So it's going to be on again, off again. There's going to be a great deal of volatility on the tariffs that are threatened. That's number one. The second step in the whole process is, which we're starting to see unfold, we saw it with the consumer price index, and that is you're going to see the rate of inflation, the inflation that's associated with increased tariffs, start to show up in the consumer price and personal consumption expenditure price index, which are the important indexes which are followed by the Federal Reserve. In other words, the tariffs, the inflation associated with the tariffs will start to show up. The third thing you'll see is that the Federal Reserve will respond to that combination. And I think the way they're going to respond is they will not reduce short-term interest rates. The consensus now is they're going to reduce short-term interest rates one time in September and maybe one time in December. I don't share that view because I don't think we'll be making enough progress on inflation, and I think the economy will be holding together, and the Federal Reserve does not have to be in a hurry to reduce short-term interest rates. So I think this is going to start to play out very much the way Trump won 2018, 2019 played out. Remember, we had a declining stock market when we were going through the increase in inflation during 2018 and the response of the Federal Reserve. But that was followed in 2019 by the Federal Reserve reducing short-term interest rates as inflation came down, and the stock market did extraordinarily well in 2019. So tough times maybe in the foreseeable future, but after we go through those tough times of somewhat higher inflation, a lack of Federal Reserve response, we'll start to get good stock markets. So I'm telling everybody to be patient. Be very, very patient. We're headed towards good times.
Okay. So traders and investors do need to be patient at this point in time in the current market. Thank you so much, Mr. Johnson, for joining us today and helping us decode the macro market setup today with respect to Fed, inflation, as well as tariffs. Thank you so much for joining us this morning. All right, then let's move on and shift focus back to the Indian markets. Now, Sharad is here to give us a roundup of the